Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, daily chart of the ES, and what we saw yesterday is, a continuation of what we were talking about. The Ukraine situation, at least from the market's perspective, has diffused or resolved itself, and we saw between the RTH close and the RTH open, we saw a 19 handle gap. The intraday range was about 11 handles, so nothing really outrageous. It's one of those days that forces you to try to chase, and that's the last thing that you should be doing. Um, so what are we looking at going into today? Well, there's been no give back overnight, really, nothing significant. We're trading 70 half, Globex low, 67.75. So, it's been a very muted overnight trade. Um, and now, we've got the upper band there sitting there at 1891.23, and I think that's going to be the next thing that we touch. I think we see the upper band before we see the middle band. And then that middle band is going to start to rise rapidly as a function of shedding this whole pullback and starting to shed these lower levels. So over time, we're going to see price reach that area, and when we hit middle band, that's going to be high noon, and the market's going to have to decide what it wants to do. If we bounce off middle band at that point, then I really do see prices above 1900, in the 1900 and 1925 range fairly quickly. Absent some kind of negative news, but the bottom line is this: the bears have had plenty of chances here. They have had, when the last two new highs were made, there were stiff rejections, but they were rejections that they could not follow through on. And we ended up with matching lows down at 1832 between the Monday lows and the Thursday lows. Then we got the news that we needed out of Ukraine, and we blew back through and made new highs. That was the key yesterday. We needed to make those new highs. If the bulls had not made new highs, then it really starts to set up 66 as a ceiling, but that didn't happen. And what we're seeing now is what we didn't see with the last two new highs, is that the 66 area, the old highs, is becoming support. So it's starting to play out the way it's supposed to play out if you're going to see persistent strength. So right now I am looking for a little bit of a pullback, probably to test the 66 area, at best to test 60, and then a slow grind up into the jobs report on Friday. Jobs report is going to be everything. And the way they're talking about it now, we could pretty much gain 3 jobs, and they're going to say it's weather related, and probably going to go ahead and try to keep on going up. What I'll be looking for in the jobs report is, how are the revisions? If the revisions are negative, then all of this weather related talk starts to lose credibility, because what you say is, well, it's weather related, the numbers are this, the numbers are that. And then, if the revisions are positive, they can look back and say, well, this may be a lousy number, but look at the revisions. The revisions are positive, so the revisions off of this number are going to be positive. Remember, last month was not where they wanted it to be, so they're going to need some positive revisions. If there's negative revisions, then I think that's going to give the bears an opportunity to come in and take another crack at things. But that's Friday. For today, you need to watch the 66 level for support. And if we do that, you have to take out of your mind how much how far we've come. This is an exercise that you've had to do all through 2013. Don't worry about where we were 2 days ago. It doesn't matter. Because we were at 32 2 days ago and we're at 74 now, doesn't mean that we should go down. It means the market is strong, that the upper band is sitting in 1891, and we should likely, if 66 stays support, grind higher and go touch that level. So Um, if we get more negative news out of the Ukraine, then we'll trade down. But you have to assess that news for what it is. Yesterday they tried to knock it down because the Russians test fired an ICBM. Well, they didn't just, wake up and say, let's go test fire an ICBM today. Okay? You're violating who knows how many treaties when you do that. So everybody was informed, it was scheduled. You have to schedule these things. And, what does the market do? Well, it sells off a little bit, but that's an opportunity to come in and buy the dip and have it go back up. Yeah, you have to be careful with Twitter. You really do. You have to be careful with the Twitter headlines. Um, okay, so everybody have a great day. I'll be back tomorrow morning with another webcast. Check us out on Twitter at Princeton Trader. Check out the website. Come check out the chat room. And I will see you guys again tomorrow. Trade them well.